property values fell slightly in January 2025. Is this just a seasonal dip, or is it the beginning of a downturn? Well, that's what I'm going to ask Dr. Andrew Wilson in this week's Property Insider Chat. We're also going to talk about how the first auction results are giving us an indication of what's going to happen in our housing markets in 2025, and also break down the latest building approvals, which show we're just not building anywhere near enough dwellings to support our housing markets. If you want to keep up to date with what's happening in real estate and the economy, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated each time a new show comes out. National home prices commenced 2025 lower, according to the latest data from My Housing Markets. Both houses and units showed mixed results, but overall values were a bit lower. Now, before you get too worried about this, the national capital city median house price declined just 0.2% over January compared to the December quarter results. So is this just a dip in house prices related to the regular seasonal quieter holiday period, or is it the beginning of a market downturn? That's what I want to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Markets, in this week's Property Insider Chat. Hi, Andrew.
Yes, good day, Michael. And we did have a downward movement in national house prices over January. That's the January quarter compared to the December quarter. Fairly predictable, Michael. Of course, we've nonetheless had 22 of the last 24 months increases in national house prices, and surprise, surprise, the last decrease was over January 2024. There is some seasonal effects, of course, that impact house price modelling, particularly, of course, over the holiday period. And no doubt January is a significant holiday period. We have fewer buyers, fewer sellers, and importantly, we have a much lower proportion of higher priced properties in the market over the holiday period. And of course, that all acts to put downward pressure on prices. And even though our price modelling uses the same methodology as the ABS, and that does offset seasonality to some degree, you can't completely eliminate it and maintain a robust statistical model. So a little bit of an explanation there is seasonal effects. And the other point, of course, Michael, and we've discussed this here, is that we've come into the peak of the cycle. Affordability barriers are now restricting buyers from pushing up prices at the levels they have before. And this is just the way the Australian housing market works. You can't keep bidding prices up and up unless you have either lower interest rates or significantly higher incomes. So, the effect of lower interest rates that have really pushed the market along, which was, of course, impeded with higher interest rates in 2022, is now waning. And we can see that in the Sydney model. Now, not all markets are performing the same. And when we're talking about the national market, of course, it's a weighted average, and it does favour the markets, Sydney, Melbourne, Brisbane, that have higher volumes of activity. But there are still markets that are performing quite strongly, notwithstanding, the overall number. But of course, we will get perhaps the normal headlines that prices are falling, and that does create its own negative energy, as we've seen in previous cycles. But underlying drivers are still very strong, and, with demand ahead of supply. And we are going to look today, Michael, at the latest auction results, and they're quite positive again. So they're the first real data, I guess we could say, for activity this year, and certainly correlating data this year. And there was no, sign of a downturn in that data. But shall we look at the actual numbers?
Let's have a look and see how it worked around Australia. Let's start with house prices first, Andrew.
Well, the national house price, as you said, Michael, it fell by just 0.2%. And most capital cities reported a fall in house prices over that January quarter compared to the December quarter. Sydney was down by 0.4%, similar to Melbourne, 0.3%. That Brisbane market, Michael, as I mentioned, there are exceptions here, keeps on keeping on. it had another increase up by 0.8% over the quarter. Perth was up 0.6%. Canberra up 0.2%, and the other smaller capitals declined. But when we look at the annual figures, the full year results, Michael, they're quite spectacular for those big three markets, as we've called them. Perth still up 21.8% over the past year, up 12.5%. Adelaide over the same period. Brisbane up 13.1%. Sydney also up 5.4%. As we've continued to discuss, Melbourne's been the laggard, down by 0.7%. So prices basically flat, house prices in Melbourne over the past year. And look, when we look at the 2-year growth rates for Perth, Adelaide, and Brisbane, they're unbelievable. They're quite spectacular. Perth up 42.8% over the past 2 years. Adelaide 24.9% and Brisbane up 28.9%. So very substantial figures when we look at the longer term scenarios. And as I said, the seasonal effects have impacted prices over January, as we typically see. But it's not all doom and gloom in terms of the capital cities, with Brisbane rising and Perth rising continuously. So as I said, we would expect to see, with the holiday period moving through to February now, similar downward effects from the seasonal nature of the market. But of course, we do have the joker in the pack, which is the Reserve Bank, which are to meet shortly, and who knows what will happen then. So that was house prices. Unit prices actually fell more substantially than house prices over the January quarter, down by 0.7%. But as I mentioned, this is a weighted average model. It does reflect the volume of activity in each of the capitals, so it does favour the big capitals, Sydney, Melbourne, Brisbane. It particularly favours Sydney and Melbourne in terms of the unit market, because they do make up the great proportion of unit sales nationally, the national capital city model. And that's why the national model was down 0.7%, because Sydney fell 1.1%. and Melbourne down 1.5%. Similar figures with the annual figures. Sydney up 3.6%. Melbourne flat again, similar to houses, down by 1.1%. But Brisbane's been a spectacular growth market for units, up by 24.9% over the past year, and up by 43.7%, Michael, over the past 2 years. It does make a real nonsense of those narratives of a couple of years ago, which were quite adamant that the Brisbane unit market was oversupplied and would remain a wasteland, for years to come. Certainly that's proven to be completely ridiculous, and that Brisbane unit market just keeps on keeping on, as does most of southeast Queensland, and really most of the eastern seaboard in Queensland. Those markets are still quite robust. So if there's any talk of a downturn based on these figures, it's not occurring in Queensland, Michael.
Well, I'm keen to hear your thoughts about what happened with the first auction results too, because that'll give us a good indication of how the market feels. But before we do that, it's a lot's got to do with supply and demand. We recognise that the government's keen for us to build 1.2 million dwellings over 5 years. That's 4.5 years left, and it looks like we're not getting anywhere near that. So just before we look at the auction results, let's have a look at the latest home building approvals, because are we going to build enough accommodation for all the people who want homes, Andrew?
I think the short answer is no, certainly in the short term, Michael. But there's been some interesting data now that, in terms of what the trends are telling us for building approvals for homes. We do get a volatile result from month to month, and that's because the unit model is can come with a big unit development one month and then it's not followed up the next month. So monthly unit building approvals tend to be quite volatile. We saw the same effect over December. Home building approvals were up by 3.8% over December, and that followed a 5.3% November fall. So just typical of that up and down that occurs as a result of changes to that volatile unit model. Units were up 15.2%. But interestingly enough, Michael, houses were down again, and we're starting to see a a consolidating trend of falling house building approvals. Now, house building approvals have been the shining light over the past 12 months or so, whereas units have continued, the trend has continued to weaken. But houses are now showing some signs of weakening, and we'll look at the trends just shortly. But New South Wales was the top performer by 19.1%, courtesy of some big developments that came through in Sydney, big unit developments. So the annual growth trends remain certainly depressed compared to previous periods, but the quarterly trend, which is still low, is now starting to rise. It's interesting when we look at the breakdowns of the annual positions for approvals for houses and units. Units are still down over the past year, down by 2.6% compared to the previous year. Houses are up 6.8%, and overall dwelling approvals are up by 3.3% year on year. But we can now start to see, with national monthly home building approvals, are now starting to pick up in terms of the trend position. And in fact, the number that were approved over December last year are higher than were approved, significantly higher than approved over December the previous year. So some better signs there for the trend, still well below the longer term nature. And look, just to sort of put it all in perspective, Michael, there was just under 15,000 homes approved over December. And this is seasonally adjusted, so if we multiply that by 12 to get an annual figure, that gives us 180,000 homes, and that's still well behind that long-term target the government had, or aspirational target the government had, of well over 200,000 homes completed a year. These, of course, are approvals. So even though we're picking up marginally, it's still well below the targets for the government. But when we look at the longer term trends, what we're seeing is, in terms of units and houses, is that the trend for houses is now starting to weaken, and the number of houses approved over December are now lower than were approved over December. That's December 24, are lower than were approved over December 23. However, units are certainly picking up, and the trend is rising. So we've sort of reversed what the orthodoxy was, Michael, in terms of what we were seeing in approvals, with houses now weakening and units starting to pick up, albeit from quite a low base. So some interesting news there with building approvals. When we look at the capital city breakdowns, no surprise, Melbourne's still well and truly ahead of the rest. Melbourne is the engine room for home building approvals of all the capital cities. But what's interesting with the capital city breakdowns is we're continuing to see Perth booming in terms of approvals, particularly for houses. In fact, Perth is now approving, over last year, approved more homes or houses for building than Sydney. So Perth, significantly more houses approved for building in Perth compared to Sydney over 2024. So that's quite remarkable, given the difference in the size of those two capital cities. And I think it reflects just how strong that Perth market is. Plenty of demand there, and builders are responding, and perhaps not as many roadblocks to new development in Perth as there are in the eastern states. But some interesting numbers there. And when we look at the breakdowns over the year for each of the capitals in terms of houses and units, Perth is roaring along, massive increases in both approvals for units and houses over the year compared to the previous year, over 24 compared to 23. But what's also interesting, Michael, is that Sydney has actually fallen away over the year for houses and units. So Sydney's really, continuing its, march towards chronic undersupply by underbuilding, even in a year where there was plenty of incentive for governments to approve more dwellings for building. And I think the other interesting statistic is we've seen Brisbane units down over the year, Michael. Units down by 6.5%. These are building approvals for units in Brisbane. Actually fell by 6.5% over 24 compared to 23. So some interesting stats there from Brisbane, given the fact that Brisbane unit market continues to roar along. So And the long-term capital city trends, the annual building trends, just starting to pick up overall, but still well below. In fact, 35.2% lower than the 2016 peak, which just reflects the level of underbuilding that has influenced, obviously, housing market outcomes over the last few years. And again, reinforcing when we look at the capital city trends, that we're starting to see a rise in the unit trend in capital cities for building approvals. Very low, still down 56.7%, which is a significant decline since 2016. But the trend is now starting to rise. But it's got a long way to go, Michael, before it gets back to what you would consider to be supply matching demand levels. And as I mentioned before, the trend for houses is now starting to fall away after quite a robust revival over the past year. It's just now starting to look a little weaker. So some interesting news there, I think, Michael, in building approvals, and a little bit mixed to what the narrative has been. Better news for units, not so good news for houses going forward. But the big picture is we're still not anywhere near matching supply with demand at the moment.
And when you add to that the fact that many of the units won't get built for
Yes.
quite some time,
Yes.
so houses can come out of the ground and get built much quicker. Units need pre-approved, pre-purchases, pre-sales usually to get finance. Often they're not financially viable at the moment. Then they've got a much longer building period. There's no doubt that we're going to still have a shortage of dwellings for
Yes.
buying and for renting. And all the new ones are going to cost a lot more too. That is going to underpin our housing markets, isn't it?
Well, that's right. And, the dynamic's quite interesting. And these are, as you said, these are approvals, they're not completions. And usually you get up to around about 90% of approvals become completions. So, you need to deduct that from the numbers. And it's still well short of the government's target, of well over 200,000 new homes a year. We're not even close to that, even though it is improving. It's certainly not going to be, it's inconceivable that those numbers, particularly now, given that houses are falling away, it's inconceivable that those numbers will, be matched at any stage.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Now, I know My Housing Market keeps a careful eye on the auction results every weekend, and they're really starting to come out now that we're here into February. There's going to be more auctions, but January surprisingly had quite a few auctions. What's happened over the last couple of weeks with auctions, Andrew?
Well, really, last week was the first full week of auction activity. We do see auctions occurring through January, mainly in resort areas, Michael. The Gold Coast is very strong through that period, and areas such as the Mornington Peninsula in Melbourne also conduct a lot of auctions through January. But overall, it's not really giving us a sense of what's happening in the market as a whole. So last week was the first really measurable week of auction activity that the results sort of we can use to reflect what's happening broadly in the housing market. But it was actually a good start, and it's not really helping those that are looking at lower house prices to justify early year lower house prices to justify signs of a downturn, because the auction market was very solid. Clearance rates were positive, and even though early year listings were down a little bit compared to the same period last year, we've got to take that in context, because listings last year broke all the records, Michael, as you remember, and we've discussed this frequently here. auction listing numbers were at record levels last year, quite remarkably, and they started off the year very strongly.
Yes, they
And
did, didn't they?
that's because,
Interestingly, I remember why, Andrew. People are expecting an interest rate cut last year and
well,
thought, gee, the market's going to boom. Funny, it's sort of deja vu now.
yes, that's right, all over again. And we shouldn't be surprised. But anyway, one gets, used to this type of nonsense. But anyway, but the other point to that, Michael, is that of course, when in context of the cycle, we had interest rate increases in 2022. That of course subdued the market. The market regained its confidence quite quickly in 2023, but the confidence came through more buyers coming into the market. Of course, prices were lower. That encouraged buyers. They came into the market, and that acted to push up prices. Of course, prices increased by around about 8%, national capital city house prices in 2023. So that recovered basically what was lost in 2022. And of course, by the end of 2023, sellers were starting to think, hey, this isn't a bad market to get into. So those sellers that had been sitting on their hands, and of course, those that had bought and that were then looking to sell, got back into the market with more confidence. You've got to understand that sellers really have more skin in the game, in a sense, in terms of market activity. So it was no surprise, and this is what typically happens in our cycles, that the sellers followed the buyers back into the market once the market regained its confidence. And we had, all the sellers that weren't there in 2023, they were there plus in 2024. And that's why we had big numbers of sellers in the marketplace last year. So a lot of that has subsided. The cycle's flattening out. As we've said, affordability barriers are squeezing out buyer capacity to pay more. But we need to, those that were saying, the listing numbers were down compared to a year ago, have to take that in context, that was a remarkable year last year for actual listing numbers. And the listings that we did have, auction listings last week, were very solid, considering all those factors. And the other point is, Michael, that, it was the 1st of February, and last year it was the 3rd of February. Now, I know it's only 3 days, but I still think there was a little bit of, a holiday mood about the market, and therefore people were, still not engaged, and that might have had something to do with lower listing numbers, but they weren't significantly lower. But as I said, I think when you put it into context, those, sort of commentators, use that word advisedly, who have been suggesting that was a weakness in the market, need to understand more broadly what the market was offering and why. But look, all will be revealed in the next couple of weeks, Michael. So we'll see if that validates itself.
So Andrew, in the next couple of weeks, we're going to see how things go. But let's just have a look at how things went over 2024. Can we go through state by state and see how the auction results panned out?
Well, just looking at the first week of auctions, the first real week of auctions, Michael, as I said, there were some very positive results. Sydney had a clearance rate of 72.6%. Solid numbers of auctions, 479 auctions, similar numbers in Melbourne. It also had a very positive clearance rate, 74.3%. In fact, that's the highest clearance rate for some time in Melbourne. So some positive early signs in that Melbourne market, which certainly appeals as an opportunist's market. Brisbane also a little bit better than where it finished off last year, 51.6% clearance rate. Good numbers of auctions there in Brisbane, 125 auctions. Solid numbers in Adelaide, 165 auctions. It also was above 70%. And Canberra also, given the context of what we've seen with Canberra clearance rates, had a good result there, 63.7% to start the year. And, almost without exception, Brisbane's the exception, all the clearance rates, Sydney a little bit lower, were better or higher than where they were at the same time last year. And certainly, Michael, well ahead of where they were, all of them, at the end of last year. So I think there were some good positive early signs there for the market. But of course, as you said, we need to work our way through the next few weekends or the next few weeks just to see as these trends are emerging and consolidating. When we look at the longer term monthly results there for auction clearance rates for Sydney, a little bit lower than a year ago, but certainly well above mostly the results of the last 6 months of last year. And Melbourne, a very heady result there, 74.3% in Melbourne. compared to 68.7% over the same weekend last year, and one of the highest rates. Of course, this is just for the week; it's not for the full month, and it will pan out over the next few weekends. Similarly, Brisbane a little bit lower than a year ago. Adelaide a little bit higher than a year ago in terms of the monthly results, and Canberra tracking higher than a year ago. As you mentioned, Michael, we produce the Capital City auction snapshot Saturdays around about 6 o'clock on my LinkedIn site, Doc Andrew Wilson at LinkedIn, and Michael publishes the full report, which includes the regional breakdowns for Melbourne and Sydney, and also the top 10 auction sales over the week in each of the capitals. So we're off and running, Michael, in terms of our weekly insights into the market. It's interesting, as it always is, and we'll see what happens over the next few weekends.
Well, it's going to be a fun year ahead for property because we've got the interest rate announcements, we've got a federal election, we've got two political parties keen to get voters' attention, and so there'll always be news, and we look forward to discussing that each week in Property Insiders.
Thanks, Michael.
Bye.